The minimum payment illusion. You owe $3,000. The minimum payment is $60. That feels manageable. So you pay it and move on. But most of that $60 goes to interest. Maybe only a small portion touches the balance. Next month, interest builds again on almost the full amount. At that pace, a $3,000 balance can take over a decade to pay off. And you could end up paying nearly double what you borrowed. Minimum doesn't mean progress. It means prolonged. Credit card companies design minimum payments to keep you paying for years. You think you're handling the debt. You're barely slowing it down. House poor. The bank says you qualify for a $400,000 house. That feels like permission. So you stretch to the top of your budget. The mortgage fits, barely. Then reality shows up. Property taxes, insurance, repairs, maintenance, the new appliance that suddenly breaks. The mortgage was only part of the cost. The life attached to it is what drains you. Savings shrink. Vacations disappear. One unexpected bill becomes stress. The bank approved what you could pay, not what you should pay. You wanted a home. You accidentally bought pressure. Whole life insurance trap. Whole life insurance is often sold as protection plus investment, lifetime coverage, cash value, forced savings. But early on, a large portion of your premiums goes to commissions and fees. What's left grows slowly, maybe 2 to 3% a year. Meanwhile, term life insurance costs far less. The difference could be invested elsewhere with potentially higher long-term growth. Over decades, that gap can become massive. In some policies, if you borrow against the cash value, you pay interest. And when you die, the insurer may keep the cash value and only pay the death benefit. It's not always a bad product, but it's often oversold as something it isn't. Lifestyle creep. You get a raise, then another, but somehow you're still broke at the end of the month. That's lifestyle creep. Income rises, and spending quietly rises with it. A nicer apartment, a better car, more subscriptions, eating out more often. None of it feels reckless, it feels deserved. Within weeks, the extra money disappears. Your lifestyle expands to absorb every new dollar. You're not building wealth, you're upgrading comfort. Freedom doesn't come from earning more, it comes from the gap between earning and spending. Lifestyle creep quietly closes that gap. You don't move forward, you just get expensive. The car payment treadmill. Your car works fine, but the dealership shows you something newer. We can lower your monthly payment. You sign. What they don't emphasize, your old loan gets rolled into the new one. The term stretches longer, the payment drops, but the total cost rises. A few years later, you trade in again. The cycle repeats. Each time you restart the clock, often owing more than the car is worth. Meanwhile, someone who bought once and kept their car has been driving payment-free for years. You think you're upgrading. You're just committing to another long payment. And if this gave you something to think about, if it made you pause for a second and look at money a little differently, then let me know. Hit the like button so I know this is the kind of conversation you want more of. And subscribe if you're trying to build wealth in a way that actually feels calm and intentional. Not rushed, not pressured. I'd also genuinely love to know, where are you watching from? Drop your city or country in the comments. It's always powerful to see how many different corners of the world are thinking about money in the same quiet, thoughtful way.